soft, rhythmic background music fades in. Voice is deep, calm, and resonant. Let's be honest for a second. How many times has this happened to you? You see the price breaking out. It looks strong. It looks like the move everyone is talking about. You feel that rush of FOMO, so you click buy. And almost the instant your order fills, the candle stalls. It wicks, it reverses. It drags you down into drawdown, hits your stop loss, takes your money. And then, like clockwork, it rips exactly in the direction you originally thought. It feels personal, doesn't it? It feels like there is someone on the other side of the screen watching your specific account, waiting for you to commit so they can hunt you. Well, I have news for you. You aren't being hunted by a person. You are being hunted by a logic. You are fighting an algorithm. And until you understand the narrative of the market maker model, you will always be liquidity for someone else's take profit. Welcome back to the podcast. Today we are decoding the machine. Before we go deeper, I need you to understand a micro story that happens every single day in the markets. Let's call our trader Alex. Alex sits down at the charts at 8 a.m. He sees a massive green candle leaving a consolidation. He thinks, this is it, the breakout. He buys. 10 minutes later, the price crashes back down. He panics and sells for a loss. He thinks, okay, it's a fake out, I'll go short. He sells. The price immediately rallies, creates a displacement to the upside, and leaves him behind. Alex is devastated. His confidence is shattered before 9:30 a.m. Here is the shift I need you to make today. Alex was trying to trade movement. The smart money trader trades location. Alex was chasing a candle. The institutional trader was waiting for a model, specifically the market maker buy model. Alex didn't lose because he was stupid. He lost because he didn't know where he was in the cycle. He was trying to buy the distribution before the manipulation was finished. He was trying to reap the harvest before the seeds were even planted. Let's break down the core teaching for today. We are talking about the market maker model. In the world of ICT-style concepts, price is not random. It is engineered. It seeks two things, liquidity and imbalance. That's it. If you can understand the market maker model, you stop guessing and start aligning. The model has specific phases. Phase 1, the original consolidation. Slow down here. This is where patience dies. The market is ranging. It's boring. It's building orders on both sides. Most traders get chopped up here. They try to scalp 3 ticks and lose 5. Your job during the original consolidation is to do absolutely nothing. You are the sniper lying in the grass. You are not pulling the trigger. You are measuring the wind. You are waiting for the dealing range to define itself. If you cannot sit on your hands during consolidation, you will not have hands left to press the button when the real move comes. Phase 2, the manipulation. This is the most painful part for the uneducated and the most profitable part for the professional. We often call this the Judas swing. The algorithm pushes price away from the intended direction. Why? To engineer liquidity, to induce traders like Alex to take the wrong side, to hit the stops of those who entered too early. When you see price aggressively dropping into a higher time frame order block or a fair value gap, your instinct screams, fear, sell. But your logic must scream, discount, buy. This is the smart money reversal. This is where the narrative shifts. You aren't scared of the drop. You are anticipating the liquidity grab. You are waiting for the displacement that confirms the trap has been sprung. Phase 3, the distribution. This is the payoff. This is the low resistance liquidity run. Once the manipulation is complete and the reversal is confirmed, the algorithm seeks to reprice to the other side of the curve. It wants to target the liquidity resting above the original consolidation. This is where you execute. This is where you trust the PD arrays. You aren't hoping, you aren't guessing. You are simply riding the return to efficiency. Think of it like a rubber band. The consolidation is the rubber band at rest. The manipulation is the algorithm pulling it back, creating tension. The distribution is the release. You don't want to stand in front of the rubber band while it's being pulled back. You want to be on it when it snaps forward. Now, let's talk about the mindset required to trade this. Tone becomes more intense. The hardest part of using smart money concepts isn't identifying the order block. A child can spot a box on a chart. The hardest part is the wait. Can you watch the manipulation happen without reacting? Can you watch a candle move 20 points against your bias and smile, knowing it's just seeking a discount array? Discipline is not about suppressing your emotions. Discipline is about having a higher resolution map than your emotions do. When you know the map, you don't panic when the road turns. You know the turn is necessary to get to the destination. In the market maker model, time is just as important as price. Are we in a kill zone? Are we in the London Open or New York AM session? The algorithm operates on a schedule. If the setup is perfect but the time is wrong, we wait. We are professionals, not gamblers. I want to do a quick visualization with you. Close your eyes for a moment if you can. Breathe in deep. Imagine the chart. You see a consolidation, lines above and below. You feel the urge to click, but you don't. You see price drop sharply, breaking the floor. The world sees a breakdown. You see a trap. You wait. You watch price hit a specific level, a level you marked hours ago. It pauses. It wicks. Then a strong, energetic candle shoots up, leaving a gap. This is your signal. You enter calmly. You place your stop. You aren't sweating. You aren't praying. You know the algorithm is now seeking the highs. You watch the candles paint one by one until your target is hit. You close the laptop. You are done. Open your eyes. That feeling of calm? That is what we are chasing. Not just the money, the mastery. But we all know trading is messy. Sometimes you will misread the narrative. Sometimes the manipulation keeps going and stops you out. That brings us to the reset protocol. When you take a loss or when you feel the red mist of anger rising, I want you to follow this protocol. Step 1. Physical disconnect. Stand up. Walk away from the screen. Do not look at the P&L. Step 2. Zoom out. Go to the daily or the 4-hour chart. Remind yourself of the bigger picture. You got lost in the 1-minute noise. Step 3. Journal the why. Was it a setup failure or a discipline failure? If the model failed, that's a business expense. If you failed the model, that's a leak. Step 4. 2-loss rule. If you lose 2 trades in a row, you are done for the session. Protect your mental capital. The market will be there tomorrow. Your sanity might not be if you revenge trade. Here is your challenge for tomorrow. I don't want you to focus on making money. I want you to focus on mapping. Tomorrow, I want you to identify one market maker model on your chart. Draw the original consolidation, mark the manipulation leg, mark the distribution leg. Even if you don't take the trade, just map it, screen capture it, save it to your journal with the caption, "I saw the algorithm." Build the evidence that this is real. When your brain sees the pattern repeat enough times, fear disappears, hesitation disappears. All that is left is execution. Trading is the hardest way to make easy money. But when you align with the institutional order flow, you stop swimming upstream. You stop fighting the ocean and you start riding the wave. Remember, you are not here to predict. You are here to react to the evidence the algorithm provides. Stay patient. Trust the dealing range. Wait for the model. I'll see you in the next session. Keep your stops tight and your mind clear.